Okay, I think we should get started. Welcome, everybody. I'm Jonathan Zeitlin. I'm professor of political science at the University of Amsterdam. I'm the academic director of the Amsterdam Center for European Studies that is organizing this event. It's a webinar on EU governance of anti-money laundering. I see, looking at the participants list, I see lots of knowledgeable colleagues and former students in the audience. So I know that many of you are really up on this area. So you know that anti-money laundering and combating terrorist finance has been a very important area of transnational and European governance for quite a long time. I think the Financial Action Task Force was established in 1989, and the rules in this area, again, both transnationally and within the European Union, have become increasingly stringent over the years, and so too have the resources devoted to anti-money laundering and counter-terrorist financing. Esme Bosma, who I see in the audience, will defend her PhD thesis on the subject on Friday, estimates that in the Netherlands alone, Dutch banks employ 8,000 people in this field, which is really quite a lot. I think it's more than the number of active police agents on the street. At the same time, there are a lot of questions about how well this regime works. And certainly we see major banks around the world getting fined very regularly, enormous, in some cases, enormous amounts of money. Now, the European Commission has come forward after repeated scandals with a very ambitious package of measures. At the heart of these measures is a proposal for a new European anti-money laundering authority. This would have direct powers to over anti-money laundering enforcement in large, complex institutions. And it would also play a role in coordinating national financial intelligence units. I think this is a very interesting proposal. In some ways, I would say that it is one of the most centralized proposals for a European agency in any field. So it's of interest to scholars and practitioners of EU governance beyond finance. So I'm very happy that we have three extremely knowledgeable and distinguished panelists to discuss these proposals. And I'll introduce them in the order that they're going to speak, which is the opposite of the alphabetical order on the program. So we're going to start with Nicola Verwall. He is a senior fellow at the Bruegel think tank in Brussels, which he co-founded, and also at the Peterson Institute for International Economics in Washington, D.C. He studies financial systems and financial service policies with a principal focus, but not exclusively, on Europe. He's a graduate of the French École Polytechnique and École des Mines, and he's held senior positions in both the French government and the private sector. He's perhaps best known as one of the earliest advocates of European banking union. He also runs a very lively online bi-weekly discussion called Financial Statements, in which I had the pleasure to participate myself a few weeks ago. Our second speaker is Carol Lanu. He's chief executive of the Center for European Policy Studies, CEPS, which is one of Europe's leading think tanks. He also specializes in financial regulation, but also works on economic governance and single market issues, and he publishes on healthcare policy, on AML, on cryptocurrency regulation, and a variety of related topics. He frequently speaks at hearings of EU and international institutions. He is a regular, he publishes regularly in the media and writes op-eds on these kinds of topics. And our third speaker is my colleague, Marieke de Groete, who's professor of politics at the University of Amsterdam, and she's just completed a European Research Council consolidator grant, which is called FOLLOW, Following the Money from Transaction to Trial. She's written widely on counterterrorism and security practices in Europe, focusing especially on financial data. And she's pretty active in the policy discussion. She's written also a report for the Dutch government with her former student, Mara Wesseling, which raises some critical comments on the effectiveness and effects of counterterrorism financing. She's currently the academic director of the Amsterdam Institute of Social Science Research, the AISSR, and she's about to become the dean of our humanities faculty. So hopefully not, but maybe maybe she'll be too busy for these kinds of events in the coming months. Okay, in terms of format, as I said, we're going to start with Nicola. He will speak for 10 to 15 minutes. At the outset, he'll outline the main components of the Commission's package, and he'll explain why he thinks they're needed and how they respond to the past failures of EU anti-money laundering regulation and enforcement. And then Carol will speak next for about 7 to 10 minutes, and he'll offer a critical assessment of the Commission's proposals, particularly as regards the new EU AMLA, Anti-Money Laundering Authority. And then we'll have Marieke, who will speak for a similar amount of time, 7 to 10 minutes. She'll talk about the broader problems of the effectiveness and I guess also effects of the EU and global AML CFT regime. She'll draw on the findings of her ERC follow project and then draw out some inferences for assessment of the Commission's proposal. So at that point, I will give each of the panelists a few minutes to react to the others. Then we'll open up to Q&A with you, the audience. You will be able to, I'll ask you to post your questions in the Q&A, but I will have the facility to call on you if you have your microphone functioning to be able to ask your question live, and so we can make it more interactive. We can run on until about 5 o'clock continental European time, but if things are still, if the conversation is still lively, we can continue for a few minutes after that. So Nicola, the floor is yours.
Thank you, Carol. Thank you, Jonathan. Thank you also, Carol and Marieke, for being here. Thanks primarily to you, Jonathan, for organizing this and having me. It's a great topic, and I'm very much looking forward to the conversational and interactive part of the session. So to that effect, I will try and hopefully not fail to keep my initial remarks concise. The Aml framework, as you mentioned, is a relatively young policy framework as these things go. It's about 3 decades old. You mentioned the creation of the FATF in 1989. The FinCEN, the main US agency within the US Treasury, that is a kind of linchpin of the AML system, was created in 1990. The first European directive on AML was 1991. So we have a relatively young, somewhat mature framework, but which is not as mature, of course, as things like securities regulation or bank prudential supervision. In the EU, as I guess is well known to this audience, there has been a maturation over time, big package, the fourth AML directive in 2015, which was again a directive, not a regulation, so a form of minimum harmonization, and a series of high-profile cases of failure of the AML framework, and specifically, I will come back to this, of the AML supervisory framework, starting in 2018. We had ABLV Bank in Latvia, which was basically killed by fiat of the US Treasury, and the ECB, Daniel Nui at the time, observed that it was a bit shameful that we needed the US to close a clearly fraudulent bank in the EU and even the Eurozone. We had Verso Bank in Estonia, Pilatus Bank in Malta, Danske Bank again in Estonia, the Estonian branch, but with severe dysfunction also at the head office. And a big fine on ING. I'm not going to mention all those cases or go into the details, but I think the important thing is that these cases were, to a large extent, and of course Wirecard in 2020, to a large extent, these cases were failures of supervision. So what do I mean by supervision? If you think of the AML policy system, I think it's useful to think of it as having three planks. The first is AML supervision, which is making sure that the obliged entities, the banks and other firms which are under the scope of the framework, have proper AML policies. So they should have what in the US is called an AML program. They should have policies and procedures that enables them to report suspicious activities and transactions. So that's AML supervision. It's an administrative supervisory authority looking at obliged entities and making sure that they comply with their AML requirements. Then you have the FIUs, financial intelligence units. So the FIU, of course, collects suspicious activities reports from obliged entities that comply with their AML program. So that's downstream from AML supervision in a way, and they dispatch them to the relevant agencies and law enforcement authorities, which is the third plank. Law enforcement, police, prosecutors, in some cases, intelligence communities, the judiciary. So that's a kind of law and order piece. And that's, of course, done in member states because there is not much of an infrastructure for this, with minor exceptions at the EU level. So again, setting this landscape, AML supervision, an administrative function, which is done, depending on member states, by agencies that are either under the finance ministry or the justice ministry or others, but it's administrative. Then the FIU, which deals with information and dispatches the sensitive information to relevant, law enforcement, basically, and then you have law enforcement. I'm spending some time on this because I think there is often confusion between these different functions and where the dysfunctions were. I think if you look at the problems we had in the EU that were revealed in 2018, but of course predate 2018, there were, to start with, failures of AML supervision. So this is the problems that needed to be fixed in the first place. Of course, there are plenty of problems with FIUs and law enforcement, and we can discuss them. They're not my area of expertise. There were big snafus at the German FIU, for example, following its reform recently. But the problem at the beginning was really that AML programs were not being complied with. So with that, the EU legislative package has several things. It has a directive, several regulations, one which establishes the new agency, AMLA, as you mentioned, the European AML Authority, another regulation that does maximum harmonization of a lot of the stuff that used to be in the directives, a special regulation on transfer of funds, and a kind of directive on things that are not fully harmonized, such as some aspects of beneficial ownership registers and some aspects of the tasks of FIUs and national supervisors. In the maximum harmonization, there are a number of things that are just bringing the former content of the directives into regulation, so a single rule book, but there are also new things, for example, a cap of 10,000 euro on cash transactions and stuff against wallet anonymity in crypto space, and stuff, which is important. Maybe we'll come back to it, to bring consistency into the EU approach to blacklisting and gray listing of third country jurisdictions, because there has been a lot of chaos in that space, especially inconsistency between the EU and the Financial Action Task Force. So all this is useful. But the main, I think what makes this package really important and new is the creation of the AMLA, the Aml Authority, a new agency under Article 114, so same legal basis as, say, the EBA or the Single Resolution Board. So what are the key choices here? And I will go very quickly over them. We will come back to them, I'm sure, in the discussion. The first one is, do we need an agency at the EU level? In a way, there was already EBA with some coordinating tasks. Is there a need for something new here? I think the answer was a resounding yes, and I'm personally very supportive of the choice that was made by the Commission to shift the tasks that are currently at the EBA to a new agency and expand the scope of that agency's authority considerably compared with what the EBA has. Just for reminders, the EBA has a coordinating role, but that's never been very big. As recently as 3 years ago, unless I'm mistaken, the total staff on AML at the EBA was a grand total of 1.5 full-time equivalent. So it was almost nothing. The EBA has beefed up a bit now. I don't know, maybe they have 15, 20 people, but it's not like there is a big legacy of supervisory knowledge and experience there. I think more importantly, so EBA has failed during the period when it was empowered with AML tasks, and there was this very important case of Danske Bank, where it became very clear for all to see, and now thanks to EU disclosure obligations, we know exactly how the voting took place. So EBA governance was dysfunctional. So the staff, despite of being small, had done a reasonably good task, apparently, of identifying the problem at Danske Bank and the Danish FSA. But when that came to a vote on breach of union law, only one authority voted in favor of breach of union law. So it was basically all the national authorities scratching each other's back to make sure that there would not be too much punishment of any of them when they fail, which is exactly the opposite of what you want to see. But it's also exactly what you expect to happen when you have a purely intergovernmental governance framework as exists in the EBA. So by acknowledging that this system hasn't delivered, it has failed in its duties, and it has to be replaced by something that works better, I think the European Commission has given a rare example of accountability in the institutional framework, which should be applauded. I'm not going into the details of the governance funding of the new agency. I think they're okay. The funding will be about 3/4 levies on the industry, 1/4 from the EU budget, which I think is good. The governance is broadly similar to the SRB. The SRB has many problems, but I think its governance framework is fine. So you have a compact board, which will make most of the decisions, and it's not intergovernmental. It's not one country, one representative. It's a real board with full-time people who are dedicated to the task. There are transition arrangements. It's a trade-off. If you go too fast, it's going to be bungled. If you go too slow, you lose momentum. This is difficult. The location has not yet been negotiated. This is left at the end of the negotiating sequence, and probably not before the second half of this year. This is fine. Of course, we'll have the usual horse trading. All this is okay. Couple of things that are contentious. One is the scope of direct supervision. So the AMLA will have direct supervision of some obliged entities and indirect of most others. The question of which ones they supervise directly is absolutely critical and will determine really the future of this framework. As you know, we have precedents of direct supervision at the EU level, of course, the SSM for significant institutions. Also, ESMA is direct supervision advisor for a couple of limited market segments. And here I have to make a disclosure. I'm an independent non-executive director of one of them, the trade repository arm of DTCC. But of course, none of what I'm saying is in this capacity. I have my own Chinese wall. But it's important that the AMLA should be able to be proactive in direct supervision, because what we've experienced is that there are some cases, and sometimes cases at the level of an entire country, whether large or small, whereas the national supervisor just doesn't do the task. And in that case, we shouldn't wait for the 2-3 years of process that establishes the failure of the national supervisor for AMLA to be able to enter the fray. And therefore, the scope of direct supervision should be very much based on AMLA's own risk assessment and discretion, which is not the case in the current Commission proposal. So basically, in the current proposal, you only have a bunch of very large banks that are under direct supervision by construction, and then you have to wait for acknowledgement of failure of the national competent authority for the direct supervision to be triggered. And arguably, in my opinion, that doesn't allow AMLA to be proactive enough. So this is something on which the European Parliament is working. There is also a discussion in Council. It will be interesting to observe the next steps in the legislative discussion. Another point which is somewhat contentious, which I actually find apt, is the fact that there is no EU FIU in the proposal. So there is integration of the framework at the level of what I've called AML supervision, the administrative piece, but not the financial intelligence unit piece. I think that's the right sequence. I think an EU FIU will be needed in the future, but starting with AML supervision, to me, is the right way to go, and trying to do everything at once probably might have been counterproductive, if only to secure enough buy-in of the member states in Council for the project not to be stalled in the legislative process. Finally, and I'll stop there, budget. So, of course, this is very much linked to the scope of direct supervision, because the more direct supervisory authority AMLA will have, the more staff they will need. At this point, what is planned in the legislation is a budget of about 46 million euro, if I'm not mistaken, in 2026, with a total staff of about 250 employees. I think that's too low, but it's a start. So it would be better if that could be expanded a bit. I would say doubled, ideally, but that's also something that the European Parliament is looking at. But it's not ridiculous. It's not an order of magnitude too small, which I think has to be saluted as better than the alternative. I'll stop there and very much look forward to the conversation. Thank you.
Thanks, Nicola. It's really very helpful, because even with an expert audience, I don't think one can assume that everybody has read the proposals in the fine detail. I will want to come back to you on some aspects of the governance of the proposed AMLA, its degree of centralization, and the forms of direct supervision, which in many respects it's modeled on the single supervisory mechanism for banking, but it also differs in some important respects. But I want to do that after everyone has had a chance to speak, and then we can discuss it together. So, Carol, the floor is yours.
Okay, thank you, and good afternoon. Pleasure to meet you. How is it virtually? In the past, we used to sit in joint meetings, but we know how to do it like this. Of course, I hope, let's say, it comes back in another way. Let me come back on some points which Nicola already raised, but probably raise some others as well, which will also come up in the discussion afterwards or in the presentations afterwards. I would like to group it in 4 issues. First of all, agencyfication. We creating much and more agencies at European level, and certainly over the last 10 years, I think there has been quite a number of new agencies which we have created at European level. Is this the solution? Secondly, a separate structure specifically for AML. Do we need a separate structure, or can it be done in a different way? Thirdly, a bit of focus.
Carol, we're not hearing you. Suddenly you muted, or you...
I must have clicked it by...
Yeah, okay. Good. Now we hear you again.
So a third issue I wanted to look at is the focus of AMLA. Is it the focus which we have in the proposal right, or will we have a certain bias to a certain sector? And then fourthly, I wanted to discuss some capacity issues for, say, AML supervisors in general. What is needed today, and will AMLA fill that in? Just first on the agencyfication, yeah, funny word, but we see this increasingly at European level that the EU relies on agencies to do tasks which basically are EU or EU Commission tasks, and we have created plenty of agencies. We have created agencies after the financial crisis. We have created agencies also after other crises at European level, and now there is a new proposal on the table. Don't forget, we had also the SRB, the Single Resolution Board, which was created, which now employs about 400 people in Brussels, and then before that the ESAs. We also created the SSM. But one should first wonder, let's say, is this the solution to the problem? Because the problem is, I think, in the domain of money laundering, essentially one of the FIUs, not of AML. Yeah, of course, there is also a problem of AML supervision, but the main problem is that you have FIUs and the member states which work on different structures, mostly responding or say working within ministries of interior, but also sometimes Ministry of Justice, or sometimes in separate structures. I think that the main issue is that the FIUs are understaffed, do not have capacity, do not have the skills, do not have the technology to deal with all these different SIRs, let's say the suspicious activities reports, the suspicious transaction reports. And that's where the problem is. It's the big bottleneck, the way we've also analyzed in a report which we published last year, is essentially there. And of course, these entities work essentially very national. They hardly work at European level because they respond to ministries of interior. Ministry of Interior responds to, depends on justice and home affairs issues at European level. And that's an area which has been much less harmonized than anything else. So I think, let's say that the main focus should have been to create, I think Nicola mentioned something in this sense, we should have created a European FBI rather than creating a AMLA. And that with creating AMLA, we will create huge expectations, which we probably will not be able to fulfill. Related to that is this question about, should it be a separate structure or could it be done somewhere else? If you create a separate agency, this takes some time, let's say, to be effective. You need to have a budget, you need to have people, you need to agree on governance, and in the European context also you will need to agree on the place where it will be based, which always has, as we know, quite some horse trading. I thought, and we have expressed this in the report we published a year ago, but why don't you expand what EBA was already doing? And of course, Nicola was saying EBA hardly had people working on that until 3 or 4 years ago, but that was because they were not allowed under the EU budget. They were then given an additional budget because Juncker made a proposal about this, I think in 2017, 2018. It was added as part of the ESA review, and then they were given more powers and more capacity to act on the domain of money laundering. So I thought, let's say, why not using the structure which you have, which is done at the level of supervisors, in addition to strengthening the structure at the level of the FIUs, rather than creating a separate AML supervisory agency. We need to remember, let's say, that what is on the table now is an agency which will essentially help existing supervisors to do their work better. It will not prosecute money laundering directly itself. This is and remains a responsibility for the member states. So it's a kind of a big back office for member state supervisory authorities. But to do that function, let's say to be a big backup for member states, you will need to have, for example, very efficient data sharing with member states authorities. Will this work? We know, let's say, that data sharing is an extremely complex problem at European level. And we know that the first comments which we have been made, let's say, on the AMLA proposal was data. Can data be shared like this? And these comments were made by the European Data Protection Supervisor. On top of that, let's say, if they want to do the task which they will have to do, you will have to have a good governance structure. We also know that several of the agencies at European level do not work very well because the governance structure, which doesn't work very well. The Commission has now proposed an AMLA with lots of powers at the level of the board of directors and less powers for the board of governors or the board of supervisors. Member states want to change this because they think, and that's probably another criticism which we could make of AMLA, is that a centralized structure of AMLA is not necessarily adapted to the problem which we have. The problem of money laundering is a problem which happens at a very local level and is very different from the kind of money laundering you have. A typical issue which we have here in Belgium and in the Netherlands is the drugs trades. You may have seen a few days ago the mayor of Antwerp and the mayor of Rotterdam have said we will have increased investigation in all forms of fruit transport in the harbor, because we think that a lot of drugs trade from Colombia and other places is happening through the ports. This is one way of then the related money laundering, which is happening, let's say, to buying the drugs or paying for the drugs which is arriving at the port, is one way of money laundering. But there are totally different ways of money laundering, which has happened to, for example, what Nicola mentioned, the examples of through the Baltics, to the Danish, Swedish countries, from Russia. This is one way of money laundering. But on top of that, you have totally different forms of money laundering, which happens in the art sector, in the casinos, with the lawyers, with the notaries. So we have many different forms of money laundering. To detect this, you need to have local expertise. You need to understand what is the specificity of a local market. So, which is another question which I raised as is a kind of a centralized structure adapted to that? And that is what is being discussed, because I heard in the council now, let's say that the member states want more powers for the board of supervisors to, in fact, make sure, let's say, that this entity will not become too centralized. Another issue related to this separate structure for me, I spoke about EBA, but what I found very strange is that there's hardly any talk about the role of the ECB in this domain. And I know that the ECB has, from the beginning on, said, no, this is not our task. We don't want to deal with this. And we know also what the role was on the questions which were raised, certainly by many journalists, when this Latvian case broke out. Let's say that the ECB apparently, yeah, we had to hear it, as Nicola said, from the Treasury, US Treasury, but the ECB should have been informed, but didn't communicate anything. Whereas we know that the ECB, as part of this supervisory assessment, also looks at the operational structure within banks and the capacity to detect money laundering. They look at fit and proper criteria of members of the board of governors of the directors. So they must have plenty of information. But I looked at, for example, Aml proposal just a few days ago. The word ECB appears 3 times in a proposal which is over 100 pages. So, which is also related to my first comment, agencification, you create a separate structure. Will it facilitate detection of money laundering? But if the most important entity in charge of which could help you is hardly involved in the structure, will you get more information? So we complexify the structure of supervision at European level, rather than not necessarily facilitating this. I said already, my third point was about the focus of AMLA, that the focus is a lot on the financial sector. It's much less on the non-financial sector. And we know, again, let's say, if criminals know, let's say, there's a lot of focus on the financial sector, they go elsewhere. I mean, crypto is one case in point. Let's say crypto, and we've seen this in the newspapers over the last days and weeks, that crypto is increasingly used for all forms of extortion, but also money laundering. Will we have better supervision of all these alternative other sectors through AMLA? If I read the proposal, it's essentially focused on the financial sector. And we have already, since the financial crisis, much more focus on the financial sector, but I think we do not necessarily focus on the non-financial sector. Of course, they will force member states to have supervision even of self-regulatory entities. But I wonder how this will work. For example, if you think about notaries, you think about art dealers, you think about accountants, there is no supervisory structure in many member states for these entities. How can you force these, which often have self-regulatory organizations, to be supervised? I just wonder how this will work. So that is my third big question which I have for AMLA. What about the non-financial sector? And then finally, some points about capacity of AMLA. If I look at the proposal, if you have 200, 250 people for a problem which is immense, like money laundering, you will need to have enormous data analysis, IT skills in such an entity to do. You will need to have lots of data which will have to be shared by the member states. So will this entity have sufficient capacity to do this? Will it be sufficiently technology enabled to do that? I wonder. I have a bit my doubts whether the entity is proposed with the structure as is foreseen will have the capacity to do this, which is again, let's say, coming back to my earlier point, if you were to have this in an existing entity, you can benefit from the resources they have, build upon that, and probably do the work better than if you create a separate authority with all the other problems I mentioned. I probably wanted to say some last element about the international structure, if I can share this. Do you see this or don't you see this?
Yeah, we see it.
The supervisory structure today of money laundering at European level. I mentioned this point about the problem of having a separate agency. But if you see this in an international context today, say what AMLA will do is here in the middle, is basically facilitate supervision at EU level. But you see that all the other elements remain more or less like it is. And we have already some tasks, as I said, with ECB, with the supervisory authorities in this context. So all these different entities which exist at European level will have to share more information with AMLA. But in addition, we already have a regulatory policy which is set in different entities at European and at global level. My question is, will AMLA be involved in this, yes or no? That for me is totally unclear. Will member states, for example, give up their role in the FATF and say, no, AMLA will have to do this? I don't think so. So this will not necessarily facilitate it. What will be AMLA's role in the Basel Committee and the Financial Stability Board? I don't know. I couldn't find information about this in the proposal. But then you see, as I said, the main weakness at international level and at European level is the FIUs and is the cooperation between the FIUs. And we know that the FIU nets will now be facilitated by AMLA, and that AMLA will basically be the host of the FIU net. But I wonder whether this will not raise legal problems to make it work. Anyway, then you have the other elements of this entire structure. Probably also something to say about public-private partnerships on which there is a consultation or was a consultation ongoing by DG FISMA. This is seen, let's say, to be a way forward, certainly at national level. There is a lot of focus on that, certainly in countries like the UK, the Netherlands, Sweden, and Denmark. But we see at European level and international level, this raises a lot of problems about, again, data secrecy, data privacy, but also about sharing data amongst private entities, but also in between private entities and public entities. I think I'll stop here and we can move on and then take some questions afterwards. Thank you.
Thanks, Carol. There's a lot of food for thought there. I want to come back to some of the points that you raised, also about the role of the ECB, but I want to immediately pass the word to Marika.
Thanks, Jonathan, and thank you very much to ACES and you specifically, Jonathan, for organizing this conversation with topics very dear to my heart. And I really want to clarify from the beginning that I speak very much from a focus on counterterrorism financing. So the work we have done around the project called Follow, following the money from transaction to trial, has focused specifically on what's happening in the domain of counterterrorism financing. What are the laws and regulations, but also how is this playing out in practice? So how is this being practiced in banks and other places? In practice, it's very difficult actually to distinguish terrorism financing from the broader AML. You see in law and regulation, you also see in practice that this becomes one problem and that it becomes very much sort of mashed up together. But we've tried every time to sort of focus and distinguish this. And really, I started following this area immediately after 9/11. I'm interested in a broad view on this, a broad analysis of this. I'm interested in the question how spaces of illicit and licit finance are produced and imagined. I'm interested in the cultural production of the understanding of licit and illicit finance, and not just a regulation. In the beginning, for example, after 9/11, you saw very clearly this turn to understanding Hawala and underground banking networks, or let's say informal banking networks, as this huge suspect space, and a lot of discussion around that. And later, of course, with the 2004 monograph on terrorism financing, which really mapped in a lot of detail the financial networks of the 9/11 hijackers, you saw that most of their financial transactions weren't specifically suspicious or unusual or abnormal at all. So what we've seen, and I'm really talking in very broad brush strokes about the past 20 years in counterterrorism financing, but what we've seen in this area very broadly is regulation after regulation after regulation. So the international landscape of law and regulation and directives, not all of it is law, is very complex. Interlocking. There's a lot of political urgency, a lot of political willingness to act on this. We've seen a strengthening of the role of the Financial Action Task Force, which was already mentioned. And I think it's interesting to know like how specifically the FATF, for example, intervenes in their member state legal provisions. For example, the FATF was very closely involved with the Dutch criminal law on counterterrorism financing and basically helped co-write it. So the power of the FATF is really goes quite far. At the same time, in this area, we've seen little discussion on effectiveness. So very few actual good studies on, is this working? Very few good evaluation. Does this actually work to prohibit terrorists? And also we've seen hardly any discussion on this broader question, who or what counts as terrorist, right? So attacking the financing and prohibiting the financing is also very much a way to avoid and evade the question of how do we define terrorism and who isn't seen as a terrorist. What we've seen is a lot of knowledge about, but little policy attention to so-called side effects. So we know quite clearly that these laws and regulation lead to what is called de-risking. It hugely affects the humanitarian space. There's a lot of knowledge on this and very little, and again in the supervision proposal, or the new AMLA proposal and a new regulation, I see very little attention to this, what the side effects are, how it affects broader societal groups, especially NGOs, and I will come back to this point. And the other thing that we've seen broadly is that terrorism financing functions as a kind of what I call icebreaker. So you see that it functions as a mobilizing space for new types of data sharing, new types of public-private collaboration, which were also just mentioned by the previous speaker, new types of data sharing really at the limits of law, mounted on this problem of terrorism financing. And I'm not denying that this is a problem or that it can be a problem, but I'm saying that we have very little knowledge of whether this is actually working to combat the financing of terrorism. So what I think we need in this domain are at least two things. First, we need evidence-based policy. So policy that is actually based on evidence and knowledge of effectiveness and what works. And we need better accounting and integration of the side effects and better understanding of them and better integration of the side effects. And even the FATF now agrees that there are side effects in the humanitarian space, and we need better acknowledgement of those and integration into the policy space and policy proposals. So what does this all mean? I've given like a broad brush overview. What does it mean for the new EU proposal, the new regulation? And I'm not an expert on this regulation in specific, but I have some observation. The context of the proposal is interesting. So one of the very first footnotes on page 1 of the proposal refers to the 2017 Europol report, From Suspicion to Action. That report is interesting. It really signals the lack of effectiveness. It signals that only 10% of suspicious transaction reports lead to police investigation. Only 1% or less is related to terrorism financing. We also know from the Europol report that what counts as terrorism financing or what is reported as terrorism financing is very different across European member states, and over 65% of reports are received by just 2 member states, the UK and the Netherlands. So that Europol report is very interesting for signaling some of the problems and shortcomings of the ALM CFT regime. But the question is whether the new regulation and whether the new authority is a solution to those problems. And what we've seen in our project Follow is that some of the problems of effectiveness are not to do with lack of regulation or even lack of supervision. Some of it to do specifically in relation to terrorism financing is basically with insufficient analytical capacity and insufficient knowledge and insufficient profiling on what terrorism financing really is and how it might look. We simply have no reliable profiles. There is not a long statistical history. We see very poor scenarios. We see generalization from single cases. And that's not necessarily because banks are not doing their jobs, because as has been mentioned just now by Jonathan, banks have many employees on these cases, many more actually than the public sector. It's simply because the idea that you should be able to identify terrorism with large-scale data mining or with specific types of profiling might just not be the best starting points. And I know that especially when it comes to TF, banks are struggling with way too many false positives. And Esme Bosma, who is in the audience, Jonathan already mentioned, she has written a wonderful PhD thesis on these questions around banking practices. Then perhaps to move to this question of financial intelligence sharing. So one of the things I think that the authority will facilitate, especially if it will host FYU-Net, is a better exchange of financial intelligence sharing across European member states. I think if you think back to the Bataclan attacks, for example, there's a lot to be said for better EU financial intelligence sharing. At the moment, we are in a situation where some of that is done via the United States. So after the Breivik attack in Oslo, for example, the security authorities were able to map Breivik's financial networks very quickly, within 24 or 48 hours, through the CIA, through the terrorism financing tracking program. It was quite interesting because he held all kinds of strange accounts, and he had a very strange financial network. So there may be something to be said for better financial intelligence sharing among European Union member states and not necessarily via the US. But we have to realize, and Pieter Lagerwaard, who's a PhD candidate on our research project, is doing work on this. We have to realize that financial intelligence units hold data of citizens who are not suspected of a crime. So these are millions of records of non-suspect citizens. People don't necessarily know that their data are being held by an FYU. FYU databases are state secrets. So what happens when this becomes shared more easily? What are the checks and balances? What if mistakes are made? It's not just about data protection, it's also about the protection of the rights of suspects or the rights of non-suspects, because when you look at FYU databases, these are not people who are suspected of a crime necessarily. So what happens when you start sharing this data at an EU level? And the question is very much, well, are these guarantees in place? I see that I'm nearing the end of the time. Just two final points. I'll have to remain very brief. One thing that we see in the debate on counterterrorism financing is more calls for effectiveness. And one way in which the FATF has tried to increase effectiveness is by looking at court convictions. The idea being that if people are convicted in a court of law, that this is effective interception if people are convicted on the financing of terrorism. And we also did some work on that in our team. Tasneem Anwar is writing a wonderful PhD thesis about this. But what we see in the area of counterterrorism financing are prosecutions for very small amounts. Sometimes we're looking at a few €100, a few £100. We're seeing prosecutions of family members, parents, uncles, people who hold no terrorist intent or ideology at all, who are being prosecuted and convicted for terrorism financing. And so the question is that effectiveness? You know, is that the big way forward in counterterrorism financing? And then again, finally, I've mentioned it before, the side effects, questions of financial exclusion, de-risking. We know that these disproportionately affect, for example, women's NGOs, women's groups. They disproportionately affect NGOs operating in conflict areas. And just as a final note, there is now an action by someone in Belgium who has been debanked. His bank account is frozen and he's getting no answers from the bank. So it can be very Kafkaesque, I think, where when this actually affects citizens, he is blocking the ING office in a small town in Belgium with his van to protest some of these measures. So lots of questions to think about, and the core question being, is this new supervisory body the answer to some of the problems that we are seeing in this domain?
Thanks very much, Marika. It definitely brings in a different perspective from the general EU regulatory debate. I will have some questions for you about, how much is this specific to the problem of counterterrorism financing, and how much does it also extend to the broader AML space. But first, I want to give Nicola especially a chance to respond. Nicola, you were quite positive about the proposal. You've heard a number of criticisms of it from different points of view. I want to give you a chance to respond, and then I will give Carol and Marika a quick chance to react to things that each of you has said. I'm already starting to see questions in the Q&A, and I will encourage people. There are some very expert people here in the audience from academia and from practice. We would love to hear your questions. So put them in the Q&A, or also you can put up your hand in the participants list, and I will see it. So Nicola, first, I'll come over to you.
Yeah, thanks very much. And I'll try to keep it very brief, because indeed we have barely half an hour left, and lots of expertise among the attendees. So I would really like to hear from them. There are many problems here. There are many challenges. Basically, the European AML system doesn't work at all. It's a general failure. So the question is, how do you start to build something that will work? And I think, you can view this very constructively and charitably, saying, this is a new framework. There was a taboo about EU level action, which obviously enters tension with the EU single market. So breaking that taboo is very important. It has started being broken with the tasks delegated to EBA. As I said, this hasn't worked because of the EBA governance. The European Commission is drawing the right lessons from that by suggesting a new governance for a new agency. And this is improvement. Does it solve all the problems? No. I mean, Carl gave us a very good litany of all the problems, and he didn't even mention them all. Evidently, the proposed legislation doesn't solve them all, but it solves some of them, or at least it improves the response to some of them. And my motto here would be better is good. If we can get to a better place than we are now, that's to be applauded. And I think, in this respect, the Commission proposal of July last year is not just incremental. It's actually pretty radical. That's why it elicits a lot of pushback from the member states. Carol gave us a little bit of a taste of that, and I think that's a feature, not a bug. Carol mentioned a big, almost philosophical debate about agentification. I'm not sure this is the focus of this session, so I will be extremely concise here. I would say agentification is the future. If we want the EU to do its job of defending the single market, we need more agencies and better empowered agencies. And yes, this will lead to some turf wars and fragmentation of authority and some boundary issues, but I think it's basically inevitable. That should be a separate session. The short summary of it is the ECB showed the way. The ECB helped resolve the Eurozone crisis, and this has hugely empowered this idea of agentification, even so I know the ECB is an institution, not an agency. I don't think it's accurate to say AMLA would be a back office for member state agencies. I emphasized in my introduction a lot the distinction between AML supervision and the FIU function. So we can have a long debate whether the problem is more AML supervision or FIU. I think if you look at the big scandals, I mean, FIUs have plenty of problems, and I agree with Carol on that, but if you look at the big scandals, they were primarily failures of AML supervision. So I think putting the emphasis there is not only more realistic politically and legally, but it's also more effective in terms of policy priorities. Let me stop here.
Thanks, Nicola. Carol, do you want to come back, and then I give a quick word to Marika? We have already 3 questions from some very well-informed people, so I'm eager to get to them. But Carol, do you want to come back for a moment?
No, I mean, nothing at the moment. If Marika wants to raise a point, but I liked her presentation in focusing on this terrorist financing element. And the more I think about this, the more I see that the AML proposal is not sufficiently responding to that. As I said, the AML proposal, or AMLA proposal, is focused a lot on financial institutions, much less on terrorist financing. One issue which I didn't raise, if you look at the regulation and the directive, but above all that the regulation, the Commission says we will become risk-based and proportional. If I hear Marika's examples, probably risk-based, it depends how terrorist-like these people are, if they have tried to embezzle €100 or something, but it's certainly not proportional. And if I read certainly the regulation, I have the impression rather than becoming more risk-based and proportional, it's becoming less risk-based and proportional. It's becoming even more box-ticking. If I speak to the banks, and Marika said also, banks have huge departments dealing with money laundering, spend a lot of money on that. I heard one bank, one of the largest European banks, HSBC, who employs in between 4,000 to 5,000 people on money laundering. Imagine just to carry the cost of doing this. But it is related to the fact that they have to look so carefully at every transaction. They're all scared to have a fine because these fines affect their reputation so much. But if I read the proposal, they will have to submit even more suspicious activity reports and suspicious transaction reports, and the FIUs will be even more overwhelmed. So is the proposal really a solution to that? I wonder.
So, Marika, before I give you the floor, maybe here I will also ask you to respond to the question about, what's the relationship between AML and CFT? So, I mean, in Esme's thesis, she quotes somebody as saying, if AML is like, for the banks, is like looking for a needle in a haystack, CFT is like looking for half a needle in 5 haystacks. Your former PhD and co-author, Mara Vesseling, has produced a policy brief in which, if I read it correctly, she sort of says, well, the proposal is fine for AML, but for the reasons we've been discussing, it's not going to work. It's excessive for CFT. And I wonder whether that is, in fact, also your view, or whether you think that the problems are, if not as great, similar for AML.
Yeah, I mean, that's not a question I can really address in a few minutes, because there would be so much to say. But I think that there's some things that are specific to CFT. So, for example, this idea with CFT, one of the problems of detecting it in the banks is that basically often it is not illegal money. They can be very mundane, normal, legal financial transactions that, the guys in the London bombers, they had a bit of an overdraft, they rented a van. You're talking about very mundane transactions that are not abnormal. I think that could be different with money laundering, because you're talking about a much larger scale. And I think money laundering has more of a statistical history where you, with pattern recognition, for example, can actually do something in large transaction data sets. So I do think that there is a difference there. On the other hand, in all law and regulation, it has become one thing. The problem is actually a very different problem, but in regulatory terms, it has become the same thing. It's become, everybody's talking about AML/CFT. So it has become one thing, the way it is being addressed in regulation. And I would say that terrorism financing as a problem gives a lot of political urgency, right? That AML perhaps even before 9/11 never had. But terrorism financing gives a lot of political urgency to any political proposal or regulatory proposal. So I would say, and in my work, I've also found that there's almost like, you know, a use of the problem of terrorism financing to, well, to allow certain things to happen that otherwise would become would be much more difficult. Yeah, the needle and the haystack, perhaps we should bring Esme into the conversation, because there's a lot of interesting needle haystack metaphors going around in this area. I perhaps have one additional reflection, and I see that it is also raised in the Q&A by Lucia, a question about the relation with third countries. Because I think when you think about the fines and some of the money laundering scandals that we've seen in Europe, and I don't know all the cases that Nicola mentioned, I don't know the details of all the cases, but we have seen examples of big fines of European banks, for example, Bank Paribas or ING, that were related to a specific US sanctions policy and especially transactions with Iran. So some of the FinCEN fines that we have seen in Europe have really been to do with the US enforcing extrajurisdictionally their sanctions policy by forcing European banks. So I really also want to, if that becomes the grounds for the European Aml Authority, are we then also not giving FinCEN and American security policy too much power in a way in driving what the European Union is doing?
Thanks, Marika. Although the recent scandals that Nicola was talking about, the Danske Bank and Wirecard scandals, have nothing to do with sanctions, but it's certainly a relevant issue. Okay, we have 4 questions lined up from, I'm going to take them in the order, Peter Linseth, Lucia Qualia, then Eleni Tsingu, and then Dennis Morogo. But first, I want to come back to this issue of the governance of the AMLA and the centralization and the role of the member states. As I said, in some important ways, although it draws inspiration from the single supervisory mechanism, it is more centralized than that and more supranationalized. So the key decision-making body in the single supervisory mechanism is the Supervisory Board, in which the ECB has 6 votes and each member state has 1 vote. So 21 member states now who are members. So it is not, it's a joint body. It is the idea that it's kind of run by the ECB is somewhat misleading. And then we have the joint supervisory teams that supervise the individual large banks, the significant institutions, and they have an ECB coordinator and some ECB staff, but they also have predominantly staff from the national competent authorities. Now, the AMLA is going to have joint supervisory teams. So the direct supervision, as in banking, is going to be really joint supervision by national supervisors and European supervisors, the staff of the AMLA. And the supervisory board or board of supervisors of the AMLA is also going to have representation from each of the national supervisors, and they will advise the Commission on the rules for anti-money laundering. But the actual administration of the enforcement, the decisions on when to take an enforcement action, they will be made by a professional executive board, which will be appointed and where there won't be national representatives. And the question is whether that kind of structure will lead to internal conflicts with the member states and with the representatives of the National Supervisory Authority, and whether it wouldn't be better if you could find a way to do it, to give them a voice also in the enforcement decisions. That works in the single supervisory mechanism, even if it didn't work in the EBA, or for that matter, in ESMA on the Wirecard scandal. But might this be a bridge too far? I mean, I can see a number of reasons why you would do this in this way. There's no equivalent in the anti-money laundering space of the ECB to which you could attach the authority. The ECB claims that they would be prohibited from doing this because it's not in their statute. Otherwise, I would tend to agree with Carol that for banks, at least, they would be in the best position because they are constantly scrutinizing in a very detailed way the internal processes of banks. They would be in the best position to do this also for anti-money laundering. But I'd like to invite the panelists, maybe starting with Nicola, to reflect on whether this structure, even if it responds to real problems, will really work well in practice, or whether it will create new kinds of conflicts which may interfere with the effectiveness of the rulemaking and enforcement process. So Nicola, I give it to you, and then maybe we can hear from Carol, and then we go straight to
couple of things here. First, is the structure perfect? No, it's not perfect. No structure is. There will be problems. That's normal. The SSM structure is not perfect. The SRB is not perfect. ESMA and EBA, God knows they're not perfect. I think what I like in the structure is that I think it builds on the lessons learned from previous endeavors. I think it is the right division of labor to say you need a compact executive board that is able to make independent decisions quickly for individual decisions on individual obliged entities. And conversely, when you think about proposing new rules, it has to be more inclusive with the member states, advising the Commission. I mean, that strikes me as broadly the right division. You say, will it lead to conflict? That's a feature, not a bug. We're talking about an area where the alignment of interest is less clear than it is for prudential supervision. I mean, let's face it. Some member state authorities are captured. We've seen that. And some are so under-resourced that they cannot do their job properly. And we have experience of that. So the idea that all this should be a happy consensus is probably not a good guide to good institutional design. At the same time, there has to be inclusiveness, voice for the national competent authorities, and we all agree on that. And that's why it needs to be, you know, hub and spokes and with involvement of the national authorities. But the idea that the national authorities should have a block on decisions would be completely lethal to the effectiveness of the framework. And I don't want to name countries as particularly problematic here, even so everybody may have their own names in mind. I will just note that this is not only about small countries. And if you look at Wirecard, or if you look at what we know about some you know, developments in the UK, which until recently was a member of the EU, or other large or medium-sized member states, so idea that the problems are only in small countries is actually not a good guide to understanding what's really happening here. So the fact that you have to find the right balance between having an authority which builds on the knowledge of the member states, and Carol, of course, is right to say the knowledge is at the grassroots level. That doesn't mean the decision should be at the grassroots level. What you need is to channel that knowledge to an effective decision-making framework, which is not captured and at the same time is aware of local reality. So you have this trade-off between centralization and decentralization. I personally believe, after having devoted a lot of thought to it, that on this aspect, the Commission proposal is right, but it will also be developed. It's not only in the legislation. If you think of the SSM, remember that joint supervisory teams are not in the legislation. They were developed by the ECB and the national supervisory authorities. after the legislation was passed, and they're not spelled out in the legislation. So not all of this should be detailed in the legislation. Actually, you should leave the flexibility for those practices to be optimized by discussion between the new agency and its stakeholders after the legislative phase, of course, under scrutiny from the European Parliament and appropriate democratic accountability. Now, on this issue of shouldn't the ECB be in charge of that? Two things. First, the ECB is for banks in the Eurozone. AML, CFT oversight should be for a much broader scope of obliged entities and for the entire single market. So here already, I'm the first to say banks are fundamental in AML supervision, but they're not the whole picture. So you need particular emphasis on bank oversight because there's a core of the system. But if you look only at banks, it's not going to work very well. And that was one of the many reasons, but far from the only one, why it was right not to give it to the EBA, which, as its name suggests, is a banking authority. The second thing here is that the ECB, sorry, the second thing, sorry, I had lost my track, but I found it again. The second thing is that prudential supervision and AML supervision are really different things. And of course, there's a lot of operational overlap, but the mindset is not the same. Again, another metaphor, prudential supervisors look at the haystack, AML supervisors look for the needles. And AML supervisors should not take it as their objectives that the institutions they supervise should survive. Prudential supervisors, by and large, have a stake in the survival of the institutions they supervise. To put it differently, a license withdrawal or a declaration of an institution being failing or likely to fail counts as a supervisory failure for prudential supervision. It shouldn't count as a supervisory failure for AML supervisors. So you have very different sets of incentives here, and I think it's completely appropriate to have a separation of agencies. I will note that in the US, and I will stop there, it is not entirely true that it's the same agency that is in charge. Yes, FinCEN delegates a lot of its AML supervisory authority to the supervisors like the Fed, the FDIC, the OCC in banking and other agencies for non-banks. But at the end of the day, FinCEN is not the Fed, it's not the OCC, it's not the FDIC. There is a separate agency, and it's there with the ultimate responsibility for AML supervision. Again, not sanctions enforcement, that's all fact, it's different. But for AML supervision, it's FinCEN. So the notion that you should have a separate agency in charge, of course, which should work cooperatively with the ECB and other supervisors, and you don't need to repeat the ECB name 25 times in the legislation to achieve that. That's not how it works. That's important, but the separation of authority with different incentives, I think, is completely appropriate.
Thanks, Nicola. Maybe I'll come back on some of those issues if the time permits. What I want to do now is to let Peter Linseth ask a question because it's directed at Carol and it's exactly on the same issues of how much what's the balance of centralization and decentralization. Peter, I've given you I'm allowing you to speak. Maybe you can quickly identify yourself and then ask your question.
Sure. Peter Linseth from the University of Connecticut School of Law, where I direct our program in corporate and regulatory compliance, and also do a lot of work in, transatlantic comparative issues, US, EU. My question, yes, is directed at Carol, and in some sense, Nicola just addressed it. And it's sort of a tension that I perceived. On the one hand, he raised a concern regarding centralization versus decentralization. On the other hand, he stressed the functional needs for increased data flows, coordination, sharing, exchange, et cetera, in the AML space. And so really, don't those functional demands require a certain measure of increased centralization, even if decentralized action is still important? And can't we look at centralized capacity building as an essential step to building broader decentralized capacity that is necessary to developing a broader culture of AML compliance and enforcement among all the decentralized actors that he mentioned?
So, Carol, let me give you the floor. You can comment on, my exchange with Nicola, but also respond to the question from Peter.
Yeah, I mean, it's probably what I wanted to express. Let's say the difficulty to find the balance between these two. Of course, at the moment, it's probably too decentralized. I just wonder, or I create warnings to say, look, do not expect if we create an agency that we will solve the problem. And the way I see it, if I read the proposal, I think it's, as I said, a backup agency for the national authorities to be able to do the work better on the IT side, the ICT side, but also on training and formation, because we hear there's a lot of problems in capacity in detecting what is going on at the local level, which shouldn't take us from the problem. And that's why I mentioned the issue of the ports, and which is so acute here in Belgium, but also in the Netherlands, that you need to have these local expertise. And if you're sitting there all together in one single agency, you will not see what is happening on the ground. I mean, this is also, relates to what Marieke was saying. We need to have local knowledge and local knowledge sharing, otherwise we won't be able to do it well. There's also, Nicola said, it is a matter of finding the needle in the hay mountain, and it will be extremely difficult to find. But if you have local expertise and if you manage to find the right balance between the two, you will be capable of doing this. That's what I would warn a bit against. And you see this all over the proposal of the AMLA, this analogy all the time with the SSM. With prudential supervision, we have a single standard. We know, let's say, we can do it centrally, and it's much better to pool expertise to do it well, because you're looking at the large banks. Here, you're looking at something which is happening at a very local level. Of course, you can detect patterns if you share expertise with a group, but you will have to have a model which is adapted to the fact, let's say, that it's always changing nature of money laundering, always adapting to circumstances, always adapting to, if they have detected something, they will change the pattern and they will go to somewhere else. And that is the issue which I think is the biggest challenge in the domain of money laundering. Let me add, let's say, that what others have mentioned is what I regret in the Commission proposal, what I regret in money laundering overall, is that it is so difficult to find data. Marieke mentioned this as well. I regret that the Commission in its proposal didn't use the opportunity to do an impact assessment to find and to collect some good data on money laundering, which we lack. If you have a decent impact assessment, I would expect that the Commission would at least have some data in its report on what is the problem. I don't see it. The Commission in its impact assessment says, this is why the 5th directive didn't work well. That's why we're proposing a new regulation and a 6th directive, purely on legal methodological grounds, but nothing about what is now, the size of the problem. We are just confronted with very, very rough estimates of how big money laundering is. I think there are certainly people around in the banking sector and criminal agencies and so on who can detect it much better. Another element, let's say, if you speak about decentralization versus centralization, what Marieke mentioned is very useful. We speak sometimes a bit too much about this financial aspect of money laundering. We forget the criminal side of money laundering. Once you get, for example, in a port involved in helping drug traffickers to get these drugs out of a ship, you come very rapidly in a criminal milieu. And that's what I said in the chat. Look, for example, at this film, which you can look in the Belgo-Dutch film Ferry, which is beautiful, just to depict a bit how are these milieus working. And we know in the Netherlands and Belgium very well, let's say, how dangerous they are. Let's say somebody can be perfectly behaving very well in normal circumstances. All of a sudden, he gets in touch with this possibility to earn a few €1,000s more to, pass on some drugs to others, and he's part of the criminal milieu. And how do we get them out? But again, for this to know this is a totally different form than money laundering, which is happening there, than what we know in what is happening in large banks, and which may be much more dangerous than what is happening in large banks. So again, let's say money laundering has so many different, aspects to it, again, which is totally different than when you speak about banking supervision. You have one rule, which is the Basel standards, and that's what you need to supervise.
Thanks, Carol. So as we're starting to run short of time, I'm going to take the 3 questions in sequence, and then I will give the panelists, starting with Marieke, a chance to respond. So I want first to give the floor to Lucia Quaglia, then to Eleni Tsingu, and then to Dennis Morogo. So Lucia, again, just introduce yourself very briefly, although I suspect people may know who you are.
Thank you. So good afternoon, Lucia Quaglia, University of Bologna. And I very much enjoyed the presentations, and I would have a couple of questions. And the first one is I would like to get a sense of which member states support and or resist the package proposed by the Commission. And then the second question is why does the ECB seem to be eager to keep out of the fray? Thank you.
Okay, Eleni.
Yes, hi. So I'm Eleni Tsingu from the Copenhagen Business School. I wanted to ask a sort of blunt question in a way. So in the world of Aml Cft, when it comes to the various types of organizations that make up the regime, there is a almost inevitable tendency somewhere down the line to have these big policy discussions, many orchestrated by the organizations themselves, about the unintended consequences of what they do. We see this most notably with FATF, but really it happens across the board. So my question is, do you think that in the preparation of this proposal and this agency, have the people behind it thought enough about the risks and not just the benefits of this agency?
Okay, and now let's segue to Dennis Morogo, whose question is, I think, in the same broad space. Dennis, can you also please introduce yourself?
Thank you. The presentation was enlightening, especially given that I am keen on this area. I come from the East African region, which is similar to the EU region, though we haven't invested much on AML regulation. From my name, institutional affiliation, I am a lecturer at Moi University, that is a university in Kenya, and also a member of the Association of Certified Money Laundering Specialists, that is the US body. So my question, not really a question, but a comment that yes, indeed, from Mereka's presentation, it's true that we would need a data-driven intervention. I hope also that is quite a challenge also, especially in the developing countries like from our region, where mainly most countries comply with the measures, not because maybe they have diagnosed a problem, but because they are afraid of sanctions. Thank you.
Okay, so I'm going to let Marika respond first, and then Carol and Nicola give you the last word.
Thanks. Yeah, I mean, these are very interesting and relevant questions, and I think what Dennis is saying is a huge concern because there you suggest, and what we see also in relation to the banks, but you're right to say that this plays out on another level as well, is that the objective becomes compliance. So the objective does not become actually showing that money laundering or terrorism financing is being stopped or being caught. We, like I mentioned, we know very little about effectiveness, but you have a dynamic which is about compliance and demonstrating compliance. And I can very well understand that countries around the world are very worried about being blacklisted or gray listed because it affects your credit rating. So it can have a huge impact actually on on your national financial markets. Of course, it is intended to have a huge impact. But if the objective then of the regulatory practices is to be compliant and to avoid this sanction, rather than the question of whether you are actually stopping the money laundering or the terrorism financing. And we see that in banks as well in relation to their reporting practices, that the focus is on how can we be compliant, how can we stay clear of intervention by the regulator, rather than the question, is this really working? So, and then there's human rights consequences as well. I mean, we had some interviews with various partners and various bodies in global standard setting bodies, and they're proud of the fact that we have a huge increase in terrorism financing convictions in Saudi Arabia. And it made us think, well, is that something that the regulatory standard setting bodies should be proud of? And so again, also to your question, Eleni, which is about the unintended side effects, and I would actually say that there hasn't been so much discussion about the unintended side effects, because if you look at the FATF last year or maybe 2 years ago, so now they have this process around unintended side effects, and they're acknowledging for the first time that there are unintended side effects, and they're talking with NGOs and other partners about what to do about that. And I think that's a hugely important step forward. But it happened last year, and the fact that we know about the unintended side effects in the humanitarian space, we've known about it for more than 15 years. And last year, I think a dialogue started on it. And I work, for example, with partners like Human Security Collective in The Hague, who are very sharp on this, and they have been lobbying for a long, long time for some of these impacts to be seen and to be acknowledged. And this would be my concern about the new regulation and about the new supervisory capacity is, are we rolling out more regulation without taking into account some of these side effects and some of these problems that we know very well about, but somehow this regulatory juggernaut keeps going forward without these questions really being, I think, on the table with the attentiveness and impact that they should.
Thanks, Marika. Carol, say.
Very valid comments, I would say, from Marika. I agree with this. I mean, we haven't probably looked at this enough. But at European level, there is something like the Regulatory Scrutiny Board, which before a proposal is on the table has to look at the proposal, but I have not looked at their assessment of this piece of regulation. So I need to look into this, but you can all find it. If you type in the Regulatory Scrutiny Board, you should be able to find it because the proposals date back to July. But I agree, I mean, this unintended consequences of law, I mean, and this machinery sometimes in Brussels is going always faster and faster, and you can hardly follow what's going on. But there is certainly a lot to look at in this context. On the member state issue, the other issues I leave probably to others to respond, or to Nicola to respond. On the member states, as I told you, member states have a bit of concern that the proposal as is on the table for AMLA gives a bit too much powers to the Board of Supervisors and not sufficiently to the Board of Governors, and they have made a parallel with SRB, where there's a lot of powers to the Single Resolution Board, a lot of powers to the supervisors, less to the member states and the board of, say, to the the executive board, and not sufficiently to the board of supervisors, the member states, which are sitting around the table. And they said, look, this is a totally different thing. We see that you need to have more link with the member states, also because of the decentralized nature of the problem.
Thanks. So, Nicola, I leave it to you to wind up. There would be much more to discuss also about the role of EBA and ESMA, but I won't pursue that right now. Maybe you and I can talk about that privately in the future, but respond to the questions and give us your final thoughts.
A couple of very quick points here on the decision-making process and the governance, what Carol just referred to. I think it's really important to look back at the Danske case and why is it that EBA failed so miserably despite apparently good work by the staff. And that was entirely a governance failure. And now, thanks to EU transparency routines, we know exactly which agency voted how. And frankly, it's not a very edifying picture. So this notion that turkeys don't work for Christmas and national supervisors don't work for an authoritative EU authority is something we're familiar with. And again, it takes a different form in AML from the form it would take in other areas, including prudential supervision. So you, Jonathan, have been at the forefront of analyzing the SSM and how the ECB has been able to a large extent, align incentives between the national supervisory authorities and the central body. But it's not self-evident that the same alignment can be achieved in AML supervision. Again, we're talking about issues of, much rougher issues. Carol gave us a good sense of, what we're talking about in concrete terms. This is about criminals, it's about malign agents, it's about bad guys. You need decisions to be possible in a difficult environment. On the questions to Eleni and the unintended consequences, so I think Marika really responded on the broad issue of de-risking. It's one of the possible unintended consequences. There are many others. I will just say there has been almost 3 years of discussion in Council, very active discussion and very contentious adversarial discussion at times before the Commission published its proposal. And of course, the Commission is an observer of the Council working groups. The big problem here is that this process is not observable from outside. It's not public. I have a little bit of a notion of it, but I know very little about it. And the public basically doesn't know. Is that a problem? That's a broader issue about the EU legislative process. Now we're in the public legislative phase, where the co-legislators have the hand, and there's a lot of activity at the European Parliament on it. And I encourage concerned citizens to look at that activity. And I really hope that the European Parliament will be able to exercise its scrutiny and improve the proposal. And I think that's what they're aiming to do. And there is also parallel discussion in Council. As Carl told us, there is backlash from the national authorities, as we could expect. But I have to say, there are processes here. There have been a lot of discussions. This proposal doesn't come out of the head of the Commission. It comes out of a structured process in which many arguments have been exchanged, including on unintended consequences. So it's I don't want to say this process is good, let alone perfect. I just want to mention that it exists. And it's a problem that so little of it is public, but it has to be kept in mind. Lucia, why does the ECB want to stay out of it? I think the ECB, to its credit, is kind of parsimonious in the kind of mandate they want to have. They're very aware that they have enormous powers. They had a big expansion of their powers with banking supervision. They're a hugely powerful institution which is not bound by elections and the kind of direct democratic accountabilities that governments have. And they know that there is a risk here. So they don't want accretion of powers and turf that is not indispensable for their mission. And I think it's actually good that they are able to say, well, we don't want this one because it's not indispensable for what we do and it will be better done by others. And as I said, in this particular case, the fact that the ECB is banks and Eurozone, and the problem is banks, non-banks, and non-financial obliged entities and single market is in itself a good reason for the core of the authority not to be located at the ECB. So I commend the ECB for their restraint. Finally, which member states support and which not? Of course, this is not observable from outside. I will only note that there was an important step in the unobservable Council process in, if I remember correctly, October or November 2019, when I think 6 member states published a joint paper, which I interpreted, maybe wrongly, as a breakthrough in the Council process that ultimately led to the Commission proposal. And these were, if I remember correctly, in no particular order, the Netherlands, France, Italy, Germany, Latvia, and Spain, I think. So that's an element of response to your question. I will also note that in its communications, the French presidency has put quite a bit of emphasis on this issue and bringing it forward. The French Treasury organized a big conference last month in Paris, all in French, but there was a translation with Merit McGuinness and Ylva Johansson and other grandees and experts, which I think was the first high-level conference of the French presidency, at least in the economic and financial space. So, so they have signaled that they want to bring that forward. We'll see the results. And of course, one aspect of this is, I suspect France is among the many member states which want the new authority to be located on their territory. So how they will manage that, we'll see. But I think that gives an indication. I also, on atmospheric grounds, would say it seems the Netherlands has been pretty constructive in this whole project.
Thanks so much. I mean, this is a fascinating topic. It's a very important topic. I think we've had a great discussion. I want really to thank the panelists, but also the audience for posing good questions. And we may return to this in the future. So I will let everybody go. We've gone over our time, and thanks a lot.